What's up everyone, my name is Coleman, and today, in this video, we'll be taking a look at a unique company that has probably been one of my most requested videos, and that is CleanSpark, ticker symbol CLSK. CleanSpark is a company growing well over 100% a year and trading at a forward PE of 33, which is enough to catch anyone's attention, so I want to go in depth and take a look at this company. First, I'll go over the company and break down their Bitcoin and energy businesses, and I'll also touch on some of their growth. Then I'll finish by talking about a few of the risks and concerns I see with CleanSpark that might be worth paying attention to. With that said, let's waste no time and get right into it. So what is CleanSpark? Well, for the past few years, CleanSpark has traditionally been thought of as a software company that specializes in the microgrid industry. That said, they've recently been getting heavily involved in Bitcoin mining, and given their recent financial results, I would now consider them to be more of a Bitcoin mining company than a microgrid company. Digging into their business, CleanSpark currently operates in two segments, which I'll break down. They have their Bitcoin mining business, which I'll go over first, and then their energy business, which I'll break down later. Let's start with their Bitcoin mining business. For those of you unfamiliar, CleanSpark makes money from this business by mining Bitcoin, and then they either choose to keep it or sell it. As of August 14th, they held 525 Bitcoin, although it's likely much more now. And based on what management has said, CleanSpark plans to hold on to most of it, although they may choose to sell some of it from time to time. Now, Bitcoin mining is a very new segment for CleanSpark, but it's currently their fastest growing segment, and it's expected to drive the company's growth for at least the next couple of years. Additionally, this is a very profitable business segment with about 80+% margins. Just last quarter, Bitcoin mining made up about 73% of the company's total revenue, but you can see that just a year ago, they recorded zero revenue for this segment. So the fact that Bitcoin mining is already responsible for so much of the company's revenue is quite surprising. The main reason for this is because last year in December of 2020, CleanSpark announced the acquisition of ATL Data Center, which is a data center and Bitcoin mining company in Georgia. CleanSpark believed that this would be a good acquisition because with their experience in energy management and microgrids, they would be able to deploy their software technology to help lower the cost of energy, which is a big deal because the number one cost of mining Bitcoin is energy. Fast forward to today, and between ATL Data Center and CleanBlock, which is a recent subsidiary they formed, CleanSpark now says they're mining about 6 Bitcoin per day. That number has been increasing too, as they were only mining 4 Bitcoin per day in July and 1.8 per day in March. Some of the reason for this large increase is because of the difficulty to mine each coin has gone down due to China banning Bitcoin mining, but CleanSpark has also increased the number of miners, which has helped. The number of coins they mine per day is also expected to continue increasing, as they recently acquired a second data center in Georgia, which is supposed to provide an additional 5 to 6 Bitcoin per day, starting in late 2021. When you add that to their existing Bitcoin mining initiatives, the hope is that they might be able to mine 14 to 18 Bitcoin per day by the end of 2021, although that could change depending on any changes in mining difficulty. Now I want to run you through a few numbers so you can get an idea what a big deal it would be if they were able to mine 14 or more Bitcoin per day. When you do the math, if they were able to reach 14 Bitcoin per day with a price of $45,000 per coin, which is a little lower than the current price, then they would be generating about $630,000 per day mining Bitcoin. If you extrapolate that to 365 days, it'd mean that CleanSpark could make nearly $300 million per year mining Bitcoin. Now that can obviously wildly fluctuate depending on mining difficulty and price per coin, but with their $450 million market cap, generating $300 million a year would give them a price to sales of less than 1.5 on just their Bitcoin mining business. So you can see why this company has intrigued so many people, and this possibility does make them an interesting Bitcoin play. That said, CleanSpark is expecting to achieve between 38 and 48 million in Bitcoin mining revenues this year based on a Bitcoin price of $47,000. While next year, analysts have the entire company doing about $200 million in total revenue. So they're either not entirely sold on the company's projections of 14 to 18 Bitcoin per day, or the idea that Bitcoin would stay above $47,000. So that's something to keep in mind. Now I haven't mentioned this yet, but one of the most important parts of their Bitcoin mining business is that the average cost for CleanSpark to mine 1 Bitcoin is $6,000. So as long as the price of 1 Bitcoin is over $6,000, CleanSpark should be making money. And with the current price of Bitcoin at about $48,000, CleanSpark's Bitcoin mining margins are well over 80%, which are excellent. They also believe that they might be able to get that $6,000 cost down even further through the use of their microgrid technology. This would get them even closer to their goal of being able to mine Bitcoin at the lowest energy prices in the United States, which should increase their margins even more, assuming the price of Bitcoin doesn't tank. Also, all of this mining is being done sustainably, which is a big deal to many people, since one of the recent concerns about Bitcoin mining has been emissions. The most recent report that came out says that 91% of CleanSpark's Bitcoin mining energy came from nuclear, 7% came from water, and 2% came from coal. So over 90% of CleanSpark's Bitcoin mining runs on carbon neutral energy, and they have a goal to get that to 100%. Next up, we have their energy or microgrid business. This is a segment that generated about $2.8 million in revenue last quarter and currently makes up about 24% of the company's total revenues. Now, unlike their growing Bitcoin business, their energy business has actually declined this year from $7.5 million in the first 9 months of 2020 to $5 million today, as management said they're having problems with supply chain constraints. That said, the belief is that over time, this business will continue to grow and eventually make up a much larger total percentage of the company's revenue. But that shift is not expected to happen for a few years. Now with this business, CleanSpark is involved in many different areas with microgrids, such as hardware, software as a service, and installation and services. For those of you that are unfamiliar, microgrids are a local energy grid with control capacity, so they can connect to a traditional energy grid but also disconnect and operate autonomously. Typically, they operate connected to the main grid, but if there are certain conditions like storms or power outages, a microgrid can disconnect from the main grid and instead choose to be powered by local energy sources like generators, batteries, solar, and wind. Because of this, Navigant Research expects the global market for microgrids to grow at a compounded annual rate of 28% until 2029. Now, where CleanSpark gets involved in this industry is that they provide software and control technology that lets customers design, build, and operate their own microgrids. Some of their products are mPulse, which is a controls platform, mVolt, which is a residential power system, and Canvas and Plaid, both of which are open ADR software solutions used for load shifting programs. These products and solutions can be applied to the military, residential, industrial, and commercial sectors. That said, residential is currently the majority of this business, and last quarter about 54% of their total energy business's revenue came from the residential industry. Additionally, over the next several quarters, they expect residential sales to eventually exceed 70% of their total energy revenues as they roll out new products. A big part of this projected growth is expected to come from their mVolt product line, which was recently released to residential customers in California. This product is supposed to blend energy from solar, battery, and utility power, which should result in less shutdowns while putting less strain on the traditional grid. Overall, these are the two key segments for CleanSpark. I should also mention that CleanSpark has an other services revenue segment, which includes all other revenue generating activities that fall outside of their two core lines of business. That said, it only makes up about 3% of the company's total revenue, and they don't expect it to play a significant role in their revenue growth going forward, so I'm not going to go in depth on it. Now, what are some of the main risks or concerns I see with CleanSpark? Well, I want to touch on two that I see. One of the main concerns I see with CleanSpark is their management. I know some people actually like their management because of how much the company has grown recently, but there are some elements that concern me, so let me explain. Starting with their CEO, Zach Bradford, he seems pretty inexperienced in my opinion, and aside from his recent experience as CleanSpark's CEO, he really has no background in energy, microgrids, or engineering, and in my opinion, that's just not ideal for a company that says they're a microgrid company. Where it starts to get more interesting is that if we look at CleanSpark's latest 10Q, we can see that they paid a company called Blue Chip Accounting $131,000 last quarter, while also subleasing office space from them for another $1,500 a month. According to this 10Q, Blue Chip is 50% owned by CleanSpark's CEO, Zach Bradford. So CleanSpark is using the services of a company that's 50% owned by their CEO. Now in a 2019 10Q, CleanSpark said that all of these services were performed at discounted rates, but to me, this is something I'm not a big fan of because there are so many other accounting firms they could choose from. It just seems like a $500 million company would just choose a different firm and try to avoid any potential conflicts of interest. Another thing that caught my attention is that it's possible that CleanSpark might not be the only company that Zach currently works for. His LinkedIn profile states that he's currently working for Blue Chip Accounting. Earlier this year, a short report came out that CleanSpark has said is false, and it revealed that Bradford is actively doing accounting work for this company. For example, if we look at Livewire Ergogenics, which is a publicly traded company, we can see that their 2020 offering documents say that Zach Bradford was the auditor of them. Now, I don't necessarily know what to make of this, but it seems weird to see something like this for the CEO of a $500 million company that's trying to find its footing. But who knows, maybe this part of the short report is wrong. Moving on, in a recent 8K in April, CleanSpark's board approved one-time cash and equity incentive bonuses for their performance. As a result, Zach Bradford received a cash bonus of $2.3 million, Lori Love received $470,000, and Matthew Schultz received $1.88 million. Additionally, they all received thousands of fully vested and non-vested stock options, plus their employment agreements were updated to add Bitcoin payments to their monthly salaries. In total, this equals a significant amount of money for a company that's only generated $22 million in revenue so far this year. Plus, this happened just 1 month after CleanSpark revamped their balance sheet and closed a $200 million public offering, so the timing and size of these incentives seem questionable. Overall, although management has done a good job growing revenues, I do have some questions about CleanSpark's management team. This brings me into the second concern, which is that even though shareholders have been significantly diluted recently, there's the possibility for even more dilution. Since February of 2020 until today, CleanSpark's number of shares outstanding have increased from 5 million to 35.5 million, which is just insane. Additionally, on Wednesday, CleanSpark approved an increase in the number of authorized shares from 50 million to 100 million. So they doubled the number of authorized shares, meaning that there could be more dilution on the way. Now, in a recent interview, their CEO said that he wants to minimize dilution, but given the fact that they just doubled the number of authorized shares, I'm somewhat skeptical of that. Keep in mind, in the past, they've raised hundreds of millions of dollars through public offerings and significantly diluted shareholders, so management has been willing to dilute. Yes, this money has helped boost their growth, but continual dilution is a concern and something to be aware of. Either way, those are just two of the risks I see with CleanSpark that might be worth paying attention to. I also have some questions about their energy business and reliance on Bitcoin mining, but those might be for another video. With that said, hopefully you liked the video and found it helpful. If you want to see me break down Digital Turbine, which is another interesting company, go ahead and click on this video right here. Thank you so much for watching, and I'll see you in the next one.